Okay, so this is one of my favorite things to talk about is data because this is what all of our businesses run on, right? This is the blood of the business. It's what shows you where you're doing right, what you're doing, where there could be improvements, what you need to cut, where you can double down, and et cetera. So overall, you need to have as much data as possible to make educated decisions, to analyze what's going on and foresee future trends. So what I see a lot in businesses right now is very small P&Ls. I mean, it's sales, it's retail sales, a little bit of cost of goods, and then maybe 5 to 10 expenses. So you want to make sure that you want to be ahead of the competition. And by doing that, you need as detailed P&L and balance sheet as possible. So for example, my P&L, I think it's like 8.5 or 9 pages long. So it's super, super detailed out. So why do I do that? Is because I want to see every single source of income, how they're performing. I want to see every cost of goods sold, how it's performing against the income and every expense. If you just bundle it all together, then you don't know what's going on in your business. So we're going to start breaking all that down. So first, what I want to do with the P&L is you're going to just list out all your income divisions. So let's say first is going to be just mowing. Okay. So you're going to build all of these out and lay out as many as you want. So this could be one division, it could be 4 divisions, whatever that is for your company. So by laying them out first, separating them out, instead of just sales, instead of just products, right? You want to first start with these divisions of laying it out properly. And then what we can do is start laying them into subdivisions. And if you're in any kind of accounting software, I know QuickBooks, you can easily do this, just set up chart of accounts, then set up the products and service list. Every software will enable you to do this to get as detailed as you want it. So once you have those divisions laid out, you're going to take it a step further, right? So in mowing, maybe you have residential and you have commercial. For fertilizing, I know for our fertilizing division, we probably have 40 different line items underneath fertilizing. So it could be the same thing. It could be residential, it could be commercial, it could be by the round. So for our 6-step program, we're going to lay that out, and then that's going to go step 1, 2, 3, 4, 5, 6. You could have a soil amendment that has sulfur, gypsum, biosolid, humic acid. So you want to see what all this stuff is selling, because if it's not selling, then why isn't it selling? If it's so low, why are the prices so low? Maybe they need to be higher. So first, you just need to lay all that out. Even with landscaping, you could do a sub-account hardscapes, and you could do a sub-account softscapes. And underneath each could be softscapes could be mulch, right? It could be plants, it could be renovations. Hardscapes could be fire pits, retaining walls, patios, maintenance, seedling, cleaning, anything like that. So once you've been able to just write it all out, put it in Excel, put it on a giant piece of paper, but write every single thing that you're doing, make those sub-accounts of each division, then you can truly see where the profitable divisions are, right? You're going to see which ones are the money makers. And what I like to do too is just on QuickBooks, it's easy, but figure out what the percentage of your total business it is. That'll easily spit all those numbers out once you have those set up in your P&L in that balance sheet. So once you've laid out all those categories, now you can factor on the cost of goods sold and the expenses. So the biggest thing with those is we want to make sure that those correlate back to each one of these income service lines. So if, let's say, for example, you still have your fertilizing in the cost of goods sold, but you're going to have, let's say, your granular, your whatever liquid, your insecticide, your fungicides. So these are going to relate back to the income category. This is what's going to show you the exact direct cost of materials that go against your income. So that way, when you see your total for income, right, then you see, okay, so this is minus all of those things in that exact same division. Or you can break it down even further and say all the insecticides were part of or subtracted from the insecticide income category. You know exactly what's going where. There's no gray area of like, did I make money on this service? Did I not make money on this service? You know exactly where everything's at. So the goal is to understand what your total net income is going to be for each product or service. So first, income, lay them all out, everything that you're buying material-wise for those income accounts, and then the same with expenses. So that'll be your FERT, cost of goods sold, and you can do this with anything. So FERT expenses, I mean, it could be anything from equipment. Of course, it's less than 2,500 because everything above that's going to be on the asset list, so you can depreciate it. It could be fertilizing licenses. It could be training programs. It could be direct labor costs in that division. So maybe you just make a sub account for your payroll for just fertilizing technicians. It could be any repairs, maintenance, supplies, anything like that that you just go through on a day-to-day or yearly basis. So once you have each one of these, so your FERT income account, your FERT cost of goods sold, your FERT expenses, you can pull all of those and see as exact detailed net income for that division, for that service, for that product. Yes, there will be some things missing, let's say your overhead costs. So there won't be the, office staff, or there won't be rent in there, but you can still take that as a percentage. That's why I like the percentage aspect of QuickBooks, because if you see what your percentage is of total sales, you can kind of just take that same percentage times those overhead costs. So once you get all of those, it'll give you that net income for just that division. So understanding those numbers gives you an idea of the specific product or service. So do you want to double down on that service? Do you need to cut something? Like if your hardscaping is costing you way more because your cost of goods sold, your expenses, equipment is so high, do you need to just cut that all together and focus on softscaping because your margins are way higher, right? So you're going to see all of that when you have that data laid out. If the sales are too low, I mean, maybe you just have to raise the prices, build those to the big ticket items. Or is there a way to cut or lower the cost of goods sold or the expenses in that division itself? So once you kind of lay all these out first, now is the time when you can meet with your leadership team, your key team members, your wife, your spouse, and go over all the numbers. Figure out what's the top performers, where are the costs too high, what areas can you break down into new divisions for expansion or new crews. I mean, for us, it was, like I said, it was fertilizing was one person. And then we started breaking it down, spring aeration, fall aeration, spring overseeding, and then tree services, fungicide treatments, sulfur treatments. And then it slowly grew into, 4 different divisions in one division, because then we could double down. Okay, this one's a massive moneymaker. The margins are really high. Let's focus on all of our marketing on that. And it kind of just grows each aspect of each division. So that's a great way too, just to analyze those numbers. You have to get the numbers in place first before you can start analyzing it. You can't analyze what you don't know, because what you don't know is what you don't know, right? So with all of that, the numbers are what drives you to make educated decisions for the next season, for the next day, for the next month. You have to constantly be able to see your numbers. That's why I really love QuickBooks. If you don't have it, but you have a different bookkeeping software, just make sure that it updates and you can use it day to day or month by month, because I want to be able to look on it today and see what the P&L was for the first week of February. I want to see exactly what expenses are there, what income was there, what's going on between last week versus a year ago last week. Because with that data, that means that you can lean into it, you can press into marketing on that aspect, or this didn't work, let's do something else, right? So the data is the blood of the business. It's my favorite thing because it tells you what's going on, it tells you what's going bad, where you can lean in, where the opportunities are. So the next thing I want to share with you guys is the 10% rule. So the 10% rule is more of a 10 to 15% rule. I just say 10 because it sounds better. So you're going to list out all your top 10 clients, right? So what's your top 10 clients? Like what's their name? What's their dollar amount? What's their percentage of total business? Okay, so once you lay all this stuff out, you want to look and see if any of those top 10 customers are making more than 10 to 15% of your total sales. If so, that's a very scary place to be at, and we need to work on changing that because you're relying so heavily on that one or two clients that make up 10% of your total business that if something ever happens in the industry, if that business goes under, if they get a new property manager, a new CEO, or an external factor, like a bunch of truckers go on strike and they don't let your materials into that business, which I'm all for. But if you lose that contract or that service contract with them and they make up 10% or 20% of your business, you're to be suffering, right? So this is where I was several years ago, maybe like 8 years ago. We had a group of chain hotels that they changed one property manager because they got bought out. And we went from a 25% of our total sales to zero from one day to the next. And I said, I never want to have this happen ever again. So what can we do to what can we do to eliminate that? Where can we have risk aversion? Where can we have insurance? And the only way to do that is to keep those numbers under 10 or 15%. So once somebody starts creeping up, that means you need to go find another person just like your number one so that they're now no longer that 10% of your total income. You need to have enough customers brought on your services where it makes those one-offs of if you lose somebody that big, okay, it's going to hurt, but you're not going to be decimated. You're not going to be going under because you just lost a major contract or a major customer that 50% of your staff had to go work on every week. So just by figuring that out, how to gain those clients, how to bring in new business so no one is above that percentage is going to give you insurance in the long run. You're going to also get a higher valuation if you decide to sell or when you decide to sell down the road. Excuse me. If a buyer is looking to buy your company and they see there's only 5 customers that make up your whole business, or maybe 10 customers or 20, but the top of them bring in the most amount of income, that scares the hell out of any buyer. So you're going to get a lower multiple of your EBITDA because of that. They would rather see a lot of contracts with a lot of people because if one passes away, if one moves to a different place, if one gets a new CEO, doesn't work with you, then it's not a big deal. They can still absorb it with all their other sales. So keep that in mind too, because it's not just about the risk, but also valuation of the company. So what you also want to do as well, after you figure out if you need to go get more people, more customers, more clients, more contracts, factor in what all of these 10, what's their characteristics? How did you even get those 10 in the first place? Because this is where you need to focus the marketing and the data of why, how, where they're located at. Are they residential, commercial? Why do they choose to work with you in the first place? What's it most important to them? Because that data is what fuels the business, right? If those are your top 10, you don't need to spend time trying to market to your 400th customer that only spends $100 a year with you. These people are spending the most money. They're loyal to you. How do you duplicate them to also get your 10% or less overall sales? So look at it from their perspective as well. We talked about this in a couple workshops ago, but why are they working with you, or what is most important to them is the biggest thing. With that, you can duplicate them, you can multiply them, you can make it your goal to just focus on this type of customer. Okay. So at every stage of business, there's tremendous amount of data available to you. No matter what, you just have to go find it. It's there, it's available. Just find it, mine it, put it into proper bookkeeping so you can analyze it, make those decisions. Do we need to cut somebody? Do we need to focus on finding other businesses? Do we need to, take this division away? Do we need to double down on this division? So analyzing that data allows you to see what's working, what isn't, and what you need to do to plan for the future. With that P&L, if you constantly see that, fertilizing year over year over year is growing, you can put a plan in place of when you're going to hire the next full-time technician. You can play that model out and set aside a budget for the next vehicle. If you know you're continually going 15, 20% growth year over year, and you know you need 400 houses for a technician, you can plan it out, put it on your board. Okay, by 2024, we're gonna need another technician, another truck, another trailer, whatever it is. So that data also allows you to see that. Anybody can start a business, but those that develop the comprehensive understanding of all that data will be propelled to new levels of success. So I always like to take those numbers and your reports and then remove yourself from that and take a 30,000-foot view above the organization as a whole. Once you do that, then you're not so much in the numbers, but you can kind of see everything from that 30,000-foot view. You can see what's moving where, what's going where, and not be so much in the business, but kind of see the whole thing moving as a whole, where they're interlocking, interchangeable. But if you need to move something, if you need to scrap something, you can easily do it from that view. So there's so much good that comes out of the data. It makes you, want to learn when you see it more. It makes you want to go more in depth, more detailed, and starting with that P&L, starting with that balance sheet, starting with all of that and that customer list. If you start with just those three things, I guarantee you're going to see avenues of your business you've never seen before. You'll know where to focus your attention, and it's going to be an amazing transition from one year to the next. That's what I got for you guys today.